You've been looking through the S1, which is the filing that a company puts in when they plan to go public. What did you learn?
So, first of all, this S1 came out right around lunchtime, so it's very hungry. I'm very hungry after covering this IPO. But what I learned from this company is that they are profitable. They have
Was that a surprise?
A little bit of a surprise. When you look at these young emerging growth companies, a lot of them, especially in the tech world, aren't profitable. So when you see a consumer restaurant like this one that is, it's certainly a nice thing to see. 41% top line growth. But then, of course, there are risks like there are with every other type of IPO. You look at what the proceeds are used for. Part of that will go toward paying a select group of insiders. That's something investors should keep in mind. Another thing that's interesting about them is they derive about 87% of their supplies of patties, of burger patties and they have a large majority of other supplies tied up in one supplier. So you look at how that impacts their business in Moscow and other areas where there's some geopolitical tensions, and it's certainly a risk. Of course, there's an import ban in Moscow, and that's something that's been a problem for them.
Moscow. How many restaurants they have in Moscow?
I think they have two in Moscow, but they have 63 all over the world. So Middle East has actually also been a very big center of growth for them.
Is that a franchise, or do they own that themselves? I thought that was a franchise operation in Dubai.
They have a partnership with someone in Moscow, in Dubai. I think they also partner with someone as well.
Well, Scott Rothbort, maybe you can explain the valuation, $1 billion for a 63-restaurant chain. What do you think?
Seems a bit expensive. However, I think you're probably paying for long-term growth with this company. They're increasing the amount of units they have from about 20 2 years ago to 40 last year to 60 this year. So you can see there's a lot of growth. And certainly when you talk about 60 restaurants in the United States right now, across a population of over 300 million, going coast to coast and from border to border, there's a great deal of opportunity for this company to expand.
Scott, let me ask you further that when they're talking to Leslie, is sort of alluding to the concentration around their patty producer. I'm happy to report that their mushroom producers, however, are split for their shroom burger 50-50 with two providers. But I wonder, they're trying to establish a new level or a new type of restaurant here with a sort of higher quality content as well. Are there limitations to their growth as a result, and does that add extra risk?
Well, really, the company that you want to look at in terms of this healthier food concept that has performed the best is Chipotle Mexican Grill. So when I look at companies like Zoe's, which I think can be another Chipotle Mexican Grill in the future, you want to look towards Chipotle as your benchmark. The real question that I have with Shake Shack is not so much whether or not they can produce the product, but whether or not what's essentially an urban concept will play out across the entire country, especially when you look at their cost basis and their average tickets.
I want to ask you, Scott, about Zoe's a little bit more here, because since its IPO, it's done pretty well, and you contrast that with something like Potbelly, which went public in late 2013. The stock has tumbled quite a bit. Will Shake Shack be more like Zoe's, or will it be more like a Potbelly?
I think it's all a proof of concept. I can see them being more like Zoe's and Chipotle Mexican Grill rather than a Potbelly. Potbelly, unfortunately, just was not able to deliver, and their competition from chains such as Subway was just too great. And they really had nothing that was new and fresh in terms of their concept. So I see Zoe's being more like a Chipotle Mexican Grill, and I see Shake Shack being more like that potentially, whereas I see Potbelly just being an overall disappointment.
Hey, Scott, estimate of sales about, what, 60 to 80 million for Shake Shack, $1 billion valuation. How do you get there?
That's what makes it very expensive. And I think that's the one thing that we're going to have to really scour over the S1 filing before we get real aggressive with this particular company, because the valuation, the sales is really just off the charts. So we're going to have to see where this eventually gets priced, how it's received by the public. And, sometimes there's nothing wrong with just passing on a new IPO when it hits the market. And maybe this is something that you have to do with Shake Shack if indeed it's just priced too rich.
Scott, final question here. Danny Meyer, the chef who founded Shake Shack and, of course, Union Square Cafe and some other great restaurants, seems to own more than 50% of the stock, has control of the board as a result. Is that a positive or a negative for this company?
Oh, I think it's a positive short term because you still want to make sure that that entrepreneur who brought this concept to market is still firmly in charge. I think over the long run, you're going to want to see that he does relinquish some of that control so we can allow the growth and the opportunities in the capital markets to flourish.